Hello everyone, my name is Ajmeddin and in this video we are going to talk about tax deduction at source, various section on the Income Tax Act, and this is very important for examination purpose as well as in the office or anyone ask us that what could be the tax deduction source rate for the particular transaction. We must know about it, and TDS rates are very much important and very much relevant in our routine life as well. So in this video we are going to talk about discuss about the TDS sections, various TDS sections under Income Tax Act, and without wasting any time, let us begin with section number 192, which is on the nature of payment of salary. So whenever the salary is more than the basic exemption limit of a particular employee in a particular financial year, then employer, that means the company, needs to deduct the tax. So what is the tax rate in this case? So this must be taken care that first of all the employer needs to compute the average rate of income tax for the particular employee, and then for that rate, the payment, whenever the payment is made of about the salary, the deduction of the tax must be there on the basis of ART, that means average rate of tax. Next we talk about section number 192A, which is premature withdrawal from EPF accounts. So whenever there is a payment or an aggregate of payment for more than or equals to 50,000 rupees, then trustee of EPF scheme must deduct a tax of 10% if PAN is given by the employee, or maximum marginal rate, that means maybe 30% or 33.33% of that particular employee on such a transaction which is more than or equal to 50,000 rupees on aggregate or on the single payment basis, and it must be deducted on at the time of payment. Next we talk about section number 193, which is TDS on interest on securities. So there are three limits in this section. First of all, whenever we talk about 8% saving bond account, so whenever the payment is more than 10,000 rupees in a particular financial year, or in the case of listed company, whenever they pay on the interest of debenture and the interest payment is more than 5,000 rupees, and in any other case, in any other securities by any other payments, there is no exemption limit, there is no threshold limit. So any person who is responsible for paying any income by way of interest on security must deduct a tax of 10% whenever the payment is done to any resident security holder. And when the payment, when the TDS has to be deducted, it should be deducted at the time of credit or at the time of payment of such interest on the security, whichever is earlier. Next we talk about section number 194, which is on the dividends. So basically generally we all know that there is no TDS on dividend, because there are always a case whenever the DDT, that means dividend distribution tax, is applicable on all the transaction. But before that, before going on the details, let us talk from the initial. First of all, whenever the payment is more than 2500 to a particular shareholder, and which should be by the electronic mode, that means account pay check, and in other cases there is no limit. And whenever the DDT is paid by the company, that means dividend distribution tax is paid by the company, or it is under the section of 115O, then there is no requirement of deduction of tax. In any other case, if payment is made more than 2500 to a particular shareholder, then the payer, that means the Indian company, needs to deduct the tax, and the pay in this case will be a resident shareholder, and rate of deduction of tax will be 10%, and which should be deducted at the time of payment of such a dividends. Next we talk about 194A, which is interest, which is TDS on other securities. Then whenever a banking company, we all know that in during FD or interest on the saving bank account, we all know that the interest is paid by the banking company. So whenever the interest is more than 10,000 rupees, and in any other case it is more than 5,000 rupees, that means 10,000 rupees is for banking, post office, cooperative society which are dealing in banking business, and whenever the interest on those is more than 10,000 rupees, and in any other case it is more than 5,000 rupees, then payer, that means the bank, any person who are paying the interest, then they needs to deduct the tax of 10%, and pay in this case will be any resident, and it should be deducted at the time of credit to the account of the account holder, or at the time of payment, whichever is earlier, and the tax rate will be 10%. Next we talk about 194B, which is TDS on winning from betting, lottery or games. We all know about the KBC. So whenever the payment is more than 10,000 rupees to a particular better, or we can say a lottery ticket holder, which is who is winning more than 10,000 rupees, then payer must deduct a tax of 30% at the time of payment. Next we talk about 194C, which is payment on contractors, payment to the contractors. Whenever we are paying to the contractors, we need to deduct a tax. There are two limits in this case. First of all, if single payment is more than 30,000 rupees, we need to deduct tax, or in aggregate of a financial year it is more than 1 lakh rupees, then also we need to deduct the tax. But individual or HUF need not to deduct tax where the sum is credited or paid exclusively for the personal purpose. So there are certain things there are certain doubts which usually come into which usually come into your mind. So you can always post your queries in the comment box as well. So the payer, who is a central government or a state government or a company or a firm or individual who requires tax audit, they needs to deduct tax, and payee must be a resident contractor which includes supply of the labor, and the rate will be 1% in the case the contractor is an individual or HUF, and in any other case we need to deduct 2% in any other cases. Like for example, if company is appointed as a contractor, then we need to deduct 2%, or individual is there to 1%. And when we need to deduct the tax, it should be deducted at the time of credit or a payment, whichever is earlier. So in this section 194C, there are certain number of doubts or queries which you must arise, so you may always ask those queries in the comment box. Next we talk about 194D, which is TDS on the insurance commission. So whenever the nature of payment is insurance commission, and the threshold is more than 15,000 rupees for a financial year, then payee, that means any person who is responsible for paying any income by way of remuneration or reward for soliciting insurance business, then pay, in this case insurance, maybe an insurance agent, the rate of tax will be 5%, and it should be deducted at the time of crediting such an income to the account of the payee, that means an insurance agent maybe, or at the time of payment, whichever is earlier. Next we talk about 194DA, which is payment where the nature of payment is any sum under a life insurance policy, and which is more than or equal to 1 lakh rupees in aggregate amount. When payment is made in an aggregate of more than 1 lakh or equal to 1 lakh, then payee, that means any person who is responsible for paying sum of insurance under life insurance policy, including the sum allocated by way of bonus as well. So they need to deduct tax of 1%, and it should be deducted at the time of payment. Next we talk about 194G, that is commission, that is TDS on commission on the sale of lottery ticket. So there are many agents who used to sell the lottery tickets, and usually we see in the Mumbai that there are many lottery tickets agents roaming around, and they used to sell the state lottery tickets, and then the commission is paid by the state government to them, and in this case the limit is more than 15,000 rupees for a financial year, and the person here is any person who is responsible for paying any income by way of commission, remuneration, or a prize, by whatever name you call, but on the lottery tickets. So the rate of deduction will be 5%, and it should be deducted at the time of crediting such an income or payment of the such an income, whichever is earlier. Next we talk about 194H. It is commission or brokerage, the TDS on commission or brokerage. So here, if you pay any commission of more than 15,000 in financial year, the payer can be any person except individual or HUF, which comes under the limit of 44 AV. And whenever the limit has been crossed, that means any person other than individual or HUF whose total income which do not exceed beyond 44 AB in immediately preceding financial year shall deduct a tax of 5%, and this should be deducted at the time of crediting or the payment, whichever is earlier, to the account holder. And next we talk about 194I, which is on rent. So whenever the rent is more than 1,80,000 in any financial year, any person other than individual HUF whose total income is not exceeding the limit of 44AB should deduct a tax of 2% in case the rent is for plant and machinery. In any other case, for example, if you are taking an house on rent, or a business area, occupation area, land and building on rent, so you need to deduct 10% of TDS on such a payment to any resident shareholder, and it should be deducted at the time of crediting or payment to such an payer at the time whichever is earlier. Next we talk about 194IA, which is TDS on payment on transfer of property. This is apart from agricultural land, because agricultural land is of course are exempted from the tax under section 10. And if you talk about 194IA, the limit is more than or equal to 50 lakh rupees. So whenever you are purchasing any land or a building for immovable property for more than or equal to 50 lakh rupees, then you must deduct a tax of 1% at the time of crediting or payment to a resident transferor. So the limit here is 50 lakh rupees, in this case 194IA. Next we talk about 194IB. This is also very interesting concept, and here it has been applicable from 1st June 2017, which is very important date to be remember. And 194IB is on TDS on payment of rent by certain individual or HUF. So whenever a certain individual or HUF is paying more than 50,000 rupees per month, and they need to deduct a tax of 5% to the 5%, and at the time of payment or crediting such an amount to the to maybe the to the owner of the property or owner of that particular immovable property. So at the time of crediting such rent for the last month of the previous year or the last month of the tenancy, if the property has been vacated during the year, as the case may be, you need to deduct the tax of 5% at the time of crediting or the payment, whichever is earlier. Next we talk about, and this is I guess the final section as well. Next we talk about 194J, and this is very interesting section, and this is on the TDS on the professional fees or the technical fees, royalty, non-competence, director remuneration, whatever name you call. It's the nature of professional fees, and when director remuneration is paid, there is no limit. You need to deduct a 10% rate, but in any other cases, if you are paying for more than 30,000 for a financial year, then a person other than individual or HUF need to deduct a tax of 10%. And in this case, there has been an amendment from 1st June 2017 that 2% has to be deducted in case a payee is engaged in call center businesses. Apart from that, 194J is totally about 10% deduction in every case. So that must be deducted at the time of crediting of such an amount to the account of the payee, or at the time of payment, whichever is earlier. So I hope I would able to cover up all the sections of TDS. But in the last thing which we need to consider is the payer need to have a PAN number of the payee, because in the TDS return he has to mention those PAN number of the payee. So payee must furnish a PAN, otherwise the rate will be higher of specified in the provision. For example, in 194J it is 10%, so whatever the rate is specified, that should be there, and the rate in force or the 20%, whichever is higher. So we need to deduct the tax if the PAN, the higher of these three, if the PAN is not furnished by the payee. So I hope I would able to cover all the sections. Might be a couple of sections might be left, but all the important section of the TDS has been covered. So thanks for watching, and thank you.